Hi everyone, I hope you're all doing well and I hope you had a great Christmas. It's my first video back after the Christmas break, so hopefully I'm not too rusty, but Alibaba, wow, what a few days it's had over Christmas. It's definitely kept me on my toes and yeah, kind of a crazy Christmas period with Alibaba because, it got to Christmas Eve, I was kind of chilling, trying to do a bit of last minute shopping, trying to watch a little bit of Elf on TV, and next thing I know, my phone's going off about Alibaba stock going down. I'm like, what's going on? I know it's had a couple of bad days and everything like that, but then there was even more bad news that sent the stock down absolutely huge, and we're going to be talking about that, what it means for the company. We're going to put a little bit of respect on Alibaba's name because I feel like that's kind of gone a little bit as well, so we'll get stuck into that. Also, we're going to talk about how bad this is. We'll talk about the best case scenario, the worst case scenario, and of course, did I buy Alibaba shares, which I'm sure I've seen a few of you guys asking in the comments about this, so if you do want to keep up to date when I'm buying and selling shares, and I was talking about Alibaba on Patreon, make sure you join there because I always do post when I'm buying and selling shares, and we'll take a look at Alibaba. So obviously Alibaba's had a really rough couple of days, especially on Christmas Eve. It was going down absolutely huge. And obviously there's been a lot of bad news out there, but sometimes a lot of bad news can create great opportunities to buy stocks. It's just kind of working out, is it a good opportunity still in a great company? That's the really big thing that we need to look at. And it's always that thing that when bad news comes out, all of a sudden on Yahoo Finance forums, you see everyone popping up that's a short seller going, I told you so. But you just got to ignore them and put them to one side and think, right, this is a big dip. Is this a good opportunity for me to go make money? And that's one of the really key things that we're going to be looking at. And I am a big fan of Alibaba. I held shares, I still hold shares. I trimmed my position a few months ago by 50%, and I took a nice 70% profit on that one. And I'm a huge fan of the company. I still hold shares in them, so it means a lot to me, but I'm very glad that I made that decision to sell some shares when it was back at $300. And that's the last time I talked about the company. Is I said, it was a while ago, I said why Alibaba will go to $300, and it did. And obviously it's gone back down, so it's a good time now to go update everything with Alibaba. But I think the first thing to do is, let's put some respect back on Alibaba's name. It's been trashed a lot of people, all of a sudden you see all the shorts come out posting negative articles about it. And first of all, I'm a fan of Alibaba and I want to put some respect back on the name. So before everything that we get stuck into with the recent news, let's just focus on Alibaba for a minute or two. Now, first of all, let's just talk about the company. Now, everyone just thinks Alibaba, but they never dig past Alibaba and look at what they're actually doing. And this is probably, in my whole portfolio, the most diverse company I own with the biggest moat. Now, you could say that's actually caused one of the problems why they're probably having this negative news, but it is a massive, diverse company with loads of brands under its name. I'd have to spend 20 minutes just to go through the company to give it the full detail in the company which it deserves, but I'm just going to skim past everything. So obviously everyone knows Alibaba, but realistically the Alibaba site is pretty much the international version of eBay. So you have people that actually make the goods, that sell them to suppliers, and that's what Alibaba's used as. It's not really until you get into the other brands that you start noticing some other things they do, because they always get compared to as the Amazon of China, but there's a lot more going on than just that. So obviously the Alibaba brand, which like I say, you have people that create the products and then they sell them on to businesses who then probably go sell them on to consumers, and then there's AliExpress, which is where they can actually sell products from they sell them directly to the consumers themselves. You got Tabeyo, and I always get Tabeyo and also Tmall mixed up, so I hope I get them right, but Tabeyo's the most like the Amazon site. So I've got a friend that lives in China and he says he uses this site every day. The deliveries are super quick. They deliver products within 2 hours, which is absolutely insane, and that's pretty much where companies can actually sell to the consumers. So if I wanted to buy a new whiteboard, for example, I go on there and I buy it from a company and they will deliver it to me. So that's the most like Amazon. There's Tmall, which is a lot more like eBay, for example. So that's the difference. I hope I got them in the right way because I always get them two mixed up. And then obviously you've got Alipay, which has taken some of the headlines recently as well. You've also got the cloud business as well, which I think is still the fastest growing segment in Alibaba's company. And there's also like I said, I would have to spend 20 minutes to go into full detail about every single brand name and also every other income stream. But there's a million other streams they have there. They have streaming platforms for gaming. They have social media plays in there. There's loads of little investments they've made. And like I said, you can kind of say this is probably one of the reasons why it's caused such a headache for the company. But yeah, they're very, very well diverse. And let's not forget, this company is still valued really cheap. I only think, when you compare it to Amazon, I think that when you look at it, it's more diverse than Amazon and it's growing faster than Amazon. But it's always crazy to think this company is actually valued less than Tesla. And it's making 4 times the revenue of Tesla. And I know Alibaba will never get to the same valuation of Amazon just because it's a Chinese company, which is crazy. But the thing is the valuation is still really cheap when you look at it. And you look at the forward P even, the forward P is really dirt cheap on the company. And even past my point of view, we look at the company, if we go on Yahoo Finance, not just from my opinion, I mean, this might get changed over the next few days, but analysts still rate this as 18 as a strong buy, 29 as a buy, 1 as a hold, and a rating of 1.6. That's a very, very bullish rating on this company. So let's not forget, it's not just me. There's plenty of other people that think Alibaba is still a fantastic company. And let's just dig into the financials. 47% revenue growth next year. 47%. Pretty good revenue growth. This is a growth company. And as well as that, when it's got tricky times, if it's going to have tricky times, is this company in a great position to handle that? It is. It's got an amazing balance sheet with so much cash on it to deal with a lot of situations. So that's a very great point as well. And you know what's a great sign of a management team? When times get tough and the share price is getting hit, do you know what you go do? You go buy back your shares at cheap prices. Do you know what Alibaba have just gone and done over the weekend? They've increased the share buyback program. And that's a fantastic move. Now, just to go on a little bit off topic, people always ask me, what's the big deal with share buyback programs? Well, a while ago, the big thing that used to be is dividends. And you used to see successful companies used to increase the dividends a lot. Now, if you look at a lot of the newer companies, your Google, your Facebooks, for example, a lot of these companies, you notice, never pay dividends now. And most of these companies go to buy shares back instead of paying dividends, because they want to reward investors. Now, the old way of doing it was to do dividends, but the problem is now the company would have to pay tax on it, and then when you receive your dividend, you pay tax on that as well. So they thought, well, what's a way we can get around this? Well, we'll buy back shares, because if we buy back shares, what will happen is the EPS will go up, and that will lead to more share price gain. And that's why you've seen the slow change now over the last few years, where investors used to be so focused on dividends, but now it's mostly on share buyback programs, because that's going to help the EPS go up and it makes the company look like they're making even more profit. And that's why we get more and more share price gain than what we ever used to do. That's what people are now more focused on. So yeah, I mean, a great move by management. I was always upset when Jack Ma actually left the company, because that's one of the solid reasons why I invested in him, because I think he's so good at what he does. But he's still there in the background, and the team they do have in place is still pretty good. But yeah, so that's another great move from management team, which has been hidden in the headlines because of the big massive dip. So let's look at how bad this situation actually is now. So Alibaba's been hit by a lot of bad news recently, and it's just added up, and that's why we've seen the stock decline over 30% at the moment. So first of all, the first news we got was obviously about Chinese stocks being delisted if they don't meet the same reporting regulations as a lot of these US companies. Now, most of these Chinese companies do it anyway, so we don't need to worry about it too much. And also, they've got 3 years, I believe it's 3 years, to go and do this. So I think they've got plenty of time to do it. It's not something instant. I think if they are going to do it, they've got plenty of time to sort it out. And also, as well as that, if they don't want to do it, then they can go and move to another stock listing. So that, for me, the first problem why we saw the stock start declining from its 52-week highs, that's no problem at all. I'm not worried about that at all. Next thing is Alipay. So Alipay was going to actually IPO. That's now been told it can't IPO. They're going to have to look at breaking up the company. Now, I can see why this is going to happen. It does make sense. They do have massive control over the payment industry in China. Realistically, is it going to affect the company that much? Not really, and also it's a little bit different from being directly involved with Alibaba, for example. So that one as well isn't huge problems to me, so I'm not worried about that situation. Now, obviously, this is the big one what caused the drop. And this is what the Chinese regulators are going to be looking into Alibaba, and if they're creating a monopoly and cracking down on it. Now, as a shareholder, I'm going to be honest, Alibaba do control a bit of a monopoly, and it is something that is happening. And I've got to say credit to China and these Chinese regulators, because we see it in so many industries in the Western world, and it's not talked about. You know, we talk about Google control 90% of the search engine. We talk about Amazon and how much they control. Even something like Facebook, for example, and I know this is starting to get talked about a little bit more, but it's only talked about, and it's been talked about for the last 5 years. And China has always been represented as, you know, that country that's not trusted. It's the country that, oh, you don't go there because it's dodgy, that country, sorry. Everyone talks about China in a negative way, but you look at China and, you know, you look and go, they've gone to Alipay and gone, no, you're not having the biggest IPO ever. And that could have been China, like, oh yeah, we've had the biggest, you know, they've totally knocked that on the head. Same with Alibaba, one of the big giants in China right now. And I've got to say, I think that's one benefit to Alibaba, is that I know the Chinese regulators won't try dig too deep into Alibaba because they don't want to disrupt it. You know, it's such a big company in China, and you know the amount of people it employs, and also, you know, credit to JD and Alibaba, because those are the two companies that stopped an American company, Amazon, coming into China and dominating. So there's some credit there, you know, but you know, I do believe that it is an issue, and I do believe it's something they will look into. I do believe something will come of this, but let's not forget, nothing's happened at the moment. What has changed with Alibaba? Nothing. Okay, it's just getting investigated. Now, I do believe something will come from this. I think it probably will end up with probably a fine, which Alibaba can afford to pay. And the other thing as well is that, you know, that monopoly it controls, you know, telling certain merchants that they can only sell on Alibaba. Obviously, that's going to be a problem. I think that will go. I think that won't be able to go in the contract. I think that will go, and they'll be able to go to other places. So I think that'll be the only other thing that will change with it. The other thing about it as well is, like, Alibaba loves taking stakes in smaller companies. And with that, they have, you know, if a company's coming up, they can have a little bit of stake in there and they're successful in it, they can increase the stake and everything like that. Tencent do the exact same thing. They love buying stakes in little companies that are coming up so they can kind of control everything. Now, obviously, people say, well, that could affect the growth going forward if they're not allowed to do that. I think they still will be allowed to do that. But I do agree that it could affect the growth. But let's not forget, what I said earlier in the video, Alibaba have amazing brands. They still own Alibaba, AliExpress, they still own Alipay, they still own Tmall, they still own Taobao. They still own amazing brands, and if they are not allowed to invest in smaller companies, which yes, will hurt the growth going, and this is worst case scenario, you know, if that does happen and that will hurt the growth going forward, Alibaba's still going to grow at a huge amount. Alibaba's still going to put in double-digit growth, and it's still going to do amazing. And that's worst case scenario. So it's still going to be a very successful company. Let's not forget that. So best case scenario, it gets a fine. It walks away. Realistically, I think it gets a fine and it tells merchants they just can't sell on its website. Worst case scenario, both of them, and also it can't take stakes in smaller companies to build up a monopoly and everything. And yeah, that would sting the company on the revenue side of it, but I still think it has so many amazing brands by now that it can do really well. And it will use other tactics to still dominate the market, very much like how Amazon does. So I think that it's not a terrible scenario for Alibaba, and a lot of this is priced in now. You know, when we look at the company, nothing has changed yet, and the stock has taken a massive dip on that share price. So for me, did I buy shares? So if you think about now, I'm looking at a great company that I really like. Worst case scenario, it could get, you know, it wouldn't be an amazing thing, but the company's still going to be successful going forward. And I have a company on a 30% dip. Did I buy shares? Yeah, I bought some shares. So I doubled my position in Alibaba. And yeah, I'm quite happy with that because that's pretty much all the profit that I took on a 70% gain. Waited 3-4 months and bought back down at cheap prices. So I'm happy with that. My position right now is that I'm looking at Alibaba and I'm thinking, well, there's chance that if this negative news still carries on, the stock can bleed down a little bit, 210, 200, 190, and I still want to leave some room there. So I could still increase my position in Alibaba by about another 30%, depending on how much it bleeds out. If it stays here and goes up, I'm still happy because I've doubled my position on this dip. So yeah, I'm pretty happy. I think that I will carry on holding shares for a while, probably a good year, 2 years, I think, and then I'll see where the company goes, because in my opinion right now, Alibaba should still be a $250 stock. I think it should be probably a $300 stock in 2021, and then probably 2022. I can see this probably going towards a $400 stock. So there's definitely a lot of upside in my opinion here. So yeah, if I see a great company that I love on a discount, you guys know I love buying when there's blood on the streets, and that's what I went and did. So hope you enjoyed it. Hopefully, I don't know how long this video has gone on for, but hopefully it's not too long. But I hope you enjoyed it. And as always, smash the like button. If you are new, subscribe. That'd be absolutely amazing. And I'll see you in the next video.